Time now for our final trade of the day with Tom White at TD Ameritrade. And Tom, a big day with Walmart reporting earnings.
Yeah, the retailer has kind of avoided that whole downturn in the retail sector as it tries to compete with Amazon's picked up its online presence with its acquisition of Jet.com, which is working out really well. The executive team's executing well, and that's propelled the stock up about 17% this year. It's getting a little bit stretched on valuation for me. We had Target report earnings yesterday, and they beat soundly after kind of getting pummeled for the whole year. So expectations for Walmart are pretty high. So traffic was high in Target, so we expect that to carry over into Walmart a little bit. But the difference is that Target was down for the year, Walmart's up 17%. So I'm waiting for a pullback in this name. I think it's getting a little richly valued at these levels. It's far above its 50 and 200-day moving averages. So I wouldn't expect a huge blowout number, but I could see some topping in the stock above $81 to $83 a share. But I like it below 80.
Home Depot this week reported earnings and raised its guidance for the second time. Now, the stock sold off.
Yep.
I saw that as a classic sell on the news.
It was. You have to remember that Home Depot was already up about 13% for the year. So expectations were high going into that report. So I kind of understand, and it's justified, why the stock kind of pulled back a little bit. It's been rising ever since as the analysts have come out and protected their buy ratings on this name. But one thing you have to remember is that it's buttoned up against that 50-day moving average, which is about 152.5. So I'd expect the buyers to kind of continue in there, but then the shares are probably going to consolidate. Remember that Home Depot was always considered Amazon-proof, but if I can buy anything on Amazon and get it delivered in a day, why can't I buy tools? Why can't I buy that appliance?
People were saying that yesterday, and some people were saying that was the cause of the sell-off. I'm not so sure I'd buy that. Amazon can do almost everything.
Yeah.
But if I'm a contractor, I'm probably going to shop the best deals, yes, on some items. But isn't there a kind of a touch it, feel it, see it?
There is in a lot of products. So the consumers become really picky. So we've seen the whole retail sector kind of pull back, but then you have outliers like the Walmarts and like the Amazons that are doing well. So as consumers get picky and traditional sales go to online instead of big box, you're going to see some of that rotation into different names. Coach got hit earlier this week. Dick's Sporting Goods got hurt earlier this week. So items that you might think are Amazon proof are not. I mean, I'll buy a stove online at Amazon if it's $50 cheaper as opposed to going to Home Depot to get it.
What would be your trade in Home Depot from here?
Home Depot, like I said, I think the shares are going to consolidate between that 150 and 155 a share level. So I like a calendar spread using options where I can take advantage of that neutral or consolidating range within those two strike prices.
Measure twice, cut once.
Yes.
John Deere also reporting earnings.
Yeah, Friday morning, John Deere. Expectations priced in the option market, it's only about 4.5% move, plus or minus, after the report. The 2-year average is about 7%. And this name, once again, it's up 23% this year.
Wow.
It got a key downgrade this week, but it got a key upgrade last week from the analysts.
Well, it was running in the Trump infrastructure trade.
Right, and that's getting pushed back, all the political turmoil that we've seen domestically and internationally. So I think that's going to be pushed back even farther. I think the shares have run up on kind of optimism that this infrastructure build is going to get pushed out. One key note you have to look at with Deere is grains have been hit over the last month as yields have increased. What that does is it doesn't allow farmers to buy new equipment, and it makes it harder for the banks to kind of loan them money for new equipment if yields are high and prices on grains are low. So that's going to put a little crimp in, I think, guidance for Deere. And with the shares already up 23%, I would expect a pullback on any mediocre to downbeat report in there.
Thanks for coming on the show.